to show what a volatile, difficult market, if you like, it is. In terms of the overnight, is no news good news with both Britain and Wall Street closed?
We did see the US and the UK close, but I think the biggest impact on the Australian market and regional markets today was the possibility of another Greece bailout. Now, we know that Germany has been in favour of a restructure, but we saw a Wall Street Journal article coming out saying that Germany is reconsidering the restructure option and may go for a bailout option instead. Last year, Greece got a €110 bailout. We know that they're going to be short in terms of their financing commitments by about €30 billion, both in 2012 as well as 2013. So talk of a $65 billion bailout package saw markets absolutely breaking out. We saw the US futures up by 0.9% during the afternoon, although that's pulled back a little bit to a rise of 0.6%. And we saw the euro hitting a three-week high. The Australian market doing very well on the back of that, up by 0.9%. Most sectors trading higher, but being led higher by the energy, the materials and the finance space. So altogether, a pretty good day on the Australian market as well as markets around the region, and all on optimism that perhaps we'll see once again, I guess, a little bit of a reprieve to the Greece solution. And I guess it's not really a solution, but more kicking the can down the road and delaying dealing with the situation. But of course, markets took that as a positive, and we did see a risk-on day.
Some sort of a default is almost inevitable from somebody.
It's funny, James, we've now been talking about the European debt situation for more than a year, and we've been running through the same things over and over again. And
you're not getting bored with it, are you, Julia?
No, but markets are getting used to the fact that a lot of the big groups do seem to want the easy solution and deferring the problem time and time again. And Angus mentioned a couple of years. Of course, we've been speaking about this European debt crisis now for the last couple of years, and we still haven't seen it resolved. And it hasn't really impeded the market's ability to move forward. If we have a look at the US market, it's had a phenomenal rise in the last year. It has bubbled away in the background, but if we once again see this can being kicked out into the future, and we do see another bailout for Greece deferring the problem, well, markets are going to get used to the easy solutions, both in Europe as well as in the US. In the US, we've started to see some worse economic numbers coming through, but I guess an expectation in the markets that if we do see bad numbers coming through for 2 or 3 months, that we'll see the Ben Bernanke put really kick in and more quantitative easing. So I guess a little bit of markets just thinking that we are just going to continue to see these problems being deferred, and that if we do see the problems being deferred, then that would be a positive for markets.
And Julia, closer to home, obviously we also got some of our own economic news, if you like, seeing that the state of our own economy, and not boding well for those Q1 GDP numbers out tomorrow. I was hearing some commentators suggest that we could see a contraction of some 1.7%, one of the worst readings since the recessions of the 1990s.
I think there's really two issues in the numbers. First of all, we know that Queensland is going to have an impact in terms of these numbers, and it's going to send a lot of noise into the numbers. But I think what the market wants to really drill down into is outside of what happened in Queensland. Are we seeing a slowing down in the economy? We know we've seen difficult retail conditions for a while now. So outside of resources, are we seeing contraction in the economy? And that's really what markets are contemplating at the moment. The recent set of numbers and numbers that we saw today certainly don't help a strong economy case at all. If we have a look at the numbers that came out today, we saw private sector credit growth flat in April, and in fact, if you have a look at personal credit, we saw it down by 0.3%, and business credit down by 0.6%, so an absolute slump there. Building approval numbers are usually quite volatile, and I guess the markets were looking to strip out the Queensland numbers, but if you strip out the Queensland numbers, then we saw a fall of 5.6% there, and then of course first quarter exports absolutely slumping, down by 8.7%, and it's looking like it's going to wipe 2.4% off growth. So those first quarter GDP numbers tomorrow very much in focus. Originally the consensus was for contraction of 0.3%, but given the numbers that we've seen out today, the consensus is now for a contraction of 1.4%, and some economists predicting a contraction as much as 1.7%. So these type of numbers are ones that we haven't seen since 1991. term. So I guess the Aussie dollar is starting to price that in. Initially, the Aussie dollar did have a good day on the back of the euro, and risk currencies, risk assets doing well on hopes of a Greece bailout. But now it's starting to react to the fact that perhaps the RBA may be forced to be on hold in terms of interest rates, and we are seeing the Aussie dollar starting to fall